Hey everyone, welcome back to Corporate Decoder, the place where we sort through the corporate maze, and let me tell you, this latest report from Tile Shop Holdings Incorporated is quite the maze indeed. It looks like they're doing some serious house cleaning, and we're going to decode exactly what that means for the company and its investors. Before we jump in, if you are all about getting the real story behind financial filings, make sure you hit that subscribe button. And hey, we've built an awesome community on Discord where we break down these reports even further. The link is in the description below, so come join the conversation. So, Tile Shop Holdings Incorporated is making some pretty big moves. They decided to take their stock off the Nasdaq exchange, which is a pretty significant step. This basically means they're moving away from being a publicly traded company in the traditional sense. They filed a Form 25 to get their stock delisted, and then a Form 15 to stop reporting to the Securities and Exchange Commission. Or SEC, this is a pretty big deal because it means a lot less transparency going forward. They want to simplify things and reduce the burdens that come with being a public company. The whole idea behind this was to reduce the number of shareholders below 300. Which is a threshold that triggers a lot of SEC reporting requirements. Let's look at some of their financial performance first. For the year ending the 31st of December 2025, they reported net sales of $336.8 million. That is down from $347.1 million in 2024, and even further down from $377.1 million in 2023. So, sales have been trending downwards, which is a concern. When we dive into the revenue breakdown, man-made tiles made up 56% of sales in 2025. Natural stone tiles accounted for 19%, setting and maintenance materials at 15%, and accessories making up 8%. Delivery service brought in the remaining 2%. This mix has been pretty stable year over year. Their gross profit for 2025 was $215 million. But their gross margin rate dropped to 63.8% from 65.7% in 2024. This means they are making less profit on each dollar of sales, likely due to higher product costs. On the expense side, selling general and administrative expenses were $220.8 million in 2025, down slightly from $224.3 million in 2024. They managed to trim some costs partly by closing down distribution centers, which is a positive move to cut down on overhead. But here is the kicker. For 2025, they reported a net loss of $4.5 million. That is a big change from a net income of $2.3 million in 2024 and $10 million in 2023. So profitability took a hit. Looking at their financial health, they had $10.1 million in cash at the end of 2025. They also took on some debt, with $25 million borrowed on their credit line compared to zero debt in 2024. That is a significant increase in their reliance on borrowing. Now, let's talk about the leadership. The board composition has seen some changes, especially with new directors appointed thanks to an agreement with Fund 1 Investments LLC. It looks like Fund 1, along with some directors like Peter J. Jackulo, Incorporated Threed, and Peter H. Kamen, hold a significant chunk of the company's stock. Often over 20% combined, this concentration of ownership means they have a lot of say in how the company is run. The company is facing stiff competition. They mentioned that entering the retail tile industry isn't too difficult, meaning new players can pop up and take market share. Plus, larger home improvement stores also carry tile products, adding to the competitive pressure. They also highlight the risk of not keeping up with consumer trends, which could lead to products nobody wants and lost sales. A big risk factor for Tile Shop Holdings is the economy, especially the housing market. When people stop buying or building new homes, they also tend to cut back on renovations, which directly impacts Tile Shop sales. They also call out inflation and trade policies like tariffs as major concerns that can increase their costs and make business planning tricky. And then there is the big shift, they're no longer on Nasdaq. This makes their stock harder to trade, and investors will have less information readily available. It is a step back from public transparency, and that usually means less investor interest, which can impact stock value. When I look at Tile Shop Holdings Incorporated, I see a company trying to navigate a tough market by cutting costs. Especially through those distribution center closures, the fact that sales are down and they've moved into net losses is concerning. Taking on debt also adds pressure. While they have a strong brand and a decent product range, facing intense competition and a shaky economy, especially the housing market, are serious headwinds. Moving away from public reporting is a bold move, and it will be interesting to see if it helps them streamline operations or if it just makes them harder to follow. Their strategy seems to be focused on surviving the current market conditions and hoping for an economic turnaround. The concentration of stock ownership among a few key players could lead to strategic shifts. But it also raises questions about independent decision making. So, what is my take? Tile Shop is in a challenging spot. They are a survivor, clearly trying to adapt to a difficult environment. The reduced reporting might give them operational flexibility, but at the cost of investor confidence and access to capital markets. They've done some good cost cutting, but the downward sales trend and recent losses are red flags. Their future really depends on how well they can manage costs, adapt to economic shifts in housing, and compete in a crowded market. It's a business that's highly sensitive to consumer spending and big ticket purchases like home renovations. Now, what is your take on Tile Shop Holdings Incorporated's latest moves and financial results? Are they making the right decisions to weather the storm? Let me know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button. It really helps us out, and subscribe for more corporate breakdowns. And remember to join our Discord community linked in the description, where we talk about these filings and much more. Thanks for watching, and I'll see you in the next video.